Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, Mr. Taylor from Life Goal Investments. How you doing?
I'm doing great. Thanks so much for having us. We're in interesting times here, so I'm happy to hash some of this stuff out with you.
Yeah, we're gonna talk about an area that neither you or I will claim to be experts in, but I'm an expert in consumer. I'm an expert in psychology, and I think we're seeing a very dangerous moment in the crypto arena. In the span of the last 3 weeks, we have seen hundreds of billions of dollars destroyed, some in utter frauds. We are now seeing people can't access their money, a la bank runs in the
Run on
crypto
the bank.
world. Dude, we are damaging psychology. And again, something I learned from the 70s is, again, in the 70s, the stock market went down 50% over 20 months. Painful drop after drop after drop. And if you read the study, the average American turned off stocks for a decade, right? Warren Buffett talks about the 70s being very boring. I think the S&P was up like 1 point or something. And then we have the dot-com crash, which is the era that spanked my ass and caused me to lose 80% for being an arrogant idiot. That's, again, me calling myself that. And I think there's a lot of that going on in crypto today. There was a lot of faith. There was a lot of fraud. There was a lot of just stupidity going on, and now it's coming home to roost. Warren Buffett talks about when the tide goes out, you see who's swimming naked, and there's going to be a lot of people that you would have never expected that are swimming naked. What do you think's going on in crypto today?
I think you're 100% right. When it comes to just the loss of conviction is really what the scary thing is. When someone says you've placed money with us and we give our full faith and credit that you will be able to access this money whenever you want it, and then when you go to access it, they said, nope,
Sorry,
you can't get it anymore. Sorry. And the reason that is because what collateralizes our loans are the fact that are the underlying cryptocurrencies. And you scratch the back of your head and you say, we all know that this is an incredibly volatile asset class. How could you collateralize and say, if this thing drops by 50%, I'm not going to be able to get my money back out of it? Yeah. That is absurd. And that's where the regulation is not there yet, but needs to come, because this can't happen.
Well, it did happen. It's unregulated. I mean, they were a company. I checked out their books. They had, at the time of their last report, $12 billion in assets. Most of that was in their coin. That has now dropped 97%. They had $8 billion in loans out. So, folks, they don't got the money. They just
so what do you say when
money.
Most of it's in their own coin too? How do you take that?
They have a coin called CEL.
Yep.
So so they had it was, I don't know, I think it was $4 a coin. Now it's like 4 cents or something. So again, they had 12 billion in assets, 8 billion in loans. They're good, right? They can get there. But you take that 12 billion, it's suddenly 4 billion. You have 8 billion. You can't, there's no money. You can't, You can't, there's not enough liquidity to pay everybody back in. I'm sure their terms of service had it buried in the legalese, that A, they could do this, and B, you're.
Yep. Yeah. And if there's no tangible asset backing it, right? Their name on it, their name on this coin is what's backing it. And people argue that could be the case with a dollar. It's like, yeah, but we have 300 years of existence of the dollar to prove that that's going to be.
We have the largest military on the planet. We have, come on. It's
right.
It's an interesting intellectual discussion, but come on. This is the fictitious coin created.
It really is. You're going down a rabbit hole there and drawing at straws that you and some other people in a Discord group put together and came up with this narrative, etc. The thing that really has always gotten me is, so at first, and this is a couple years ago now, I didn't have a full grasp on what was going on with Bitcoin specifically or crypto in general. Mm-hmm. And I sat down and I did a 12-hour course on it. And admittedly, after the 12-hour course, I don't know if this is my own stupidity or the professor's fault or whatever it was, I still didn't feel like I had the greatest grasp in the world as to what provided value to that asset. And that was what always scared me from embracing it, right? I kind of heard the narrative as to why you would want it, the inflation hedge, et cetera, which is, I don't know where that narrative's gone, but you haven't heard anything about that one. But, and I don't mean to overly beat it up, it is what it is. But I guess the biggest thing that concerned me always was the fact that there didn't seem to be a big barrier to entry.
Yeah, there isn't.
If your Apple computers, your IP on the back end is protected and you can't just have someone steal it out and understand what's going on and recreate it, these cryptocurrencies were getting launched fast and furiously and gaining real assets into them. Now, I don't know the stat as of today, but the last time I looked, there was 250. Now, this is before this massive meltdown we saw the last couple weeks. So this is before that. But as of 2 weeks ago, call it, there were 250 cryptocurrencies that had over $100 million of market cap, or whatever you refer to that as.
Yeah. Well, it ain't that today. That much I know. It's something less than that. But
yeah, but like realistically, how many you as someone who is in the space, right? I'm not saying you're a crypto guy, but you're in the space, you're in economics, etc.
Dude,
how many cryptocurrencies I put 1%.
Oh, I don't know, 10 maybe. I put 1% of my net worth in as an insurance policy 2 years ago, and again, it's always been an insurance policy because again, I'm not smart enough to know, but it's in the big ones. And again, there are coins, dude, that on purpose issue 1 billion coins, have no development team, and people are just following this stuff. And again, this is another thing that I think about. This has to happen. This washout, this pain had to happen. This will lead to regulations. It will lead to a smaller footprint. It will lead to real innovation, and it will be better. But folks, we might be in the second inning of this pain. There are a lot more frauds that are going to be uncovered in the short term.
It was surprising to me that Bitcoin specifically is holding that 30,000 mark, as the waterfall kind of downdraft over the last 2 weeks or 3 weeks in the NASDAQ. I mean, granted, the NASDAQ popped that 1 week, but NASDAQ continued to sell off and Bitcoin continued to hold 30,000. And I'm looking at myself going, I'm relatively confident that the owners of the NASDAQ stocks, the tech stocks, the high flyers also are likely holders of this crypto as well. How is it holding that? And it really shocked me. And then obviously we breached it and then, went down in a meaningful well just recently.
You're down 20% from that today. Yeah. I don't know if you've ever looked at that, but again, you're on Wall Street. I wonder what Michael Saylor and MicroStrategies is thinking today, because he borrowed. He's a CEO. I'm guessing he's on the board. He's in a public company. The board of directors has to be going, what? Because they're supposed to be fiduciaries for shareholders.
Yep.
When do they fire him? I mean, is that a conversation that has to happen?
Oh, I'm sure that's happening. And they say, how can we, with public perception, if we're going to do this, how can we get through with the least muddy water that we can create out of any of it? Which is not an easy game.
No, they're down $500 million now. $500 million. And they got debt on that.
Yeah.
That's not good.
And that's the scary thing, is like these things are all interconnected too.
Yeah. Yeah. He's I think they're the largest owner. I think 140,000 or something, certainly largest corporate owner. Just imagine they fire his ass. They bring in a new CEO. The new CEO, is going to say, we don't want any of this on our sheet. Get rid of it. Dump it. Woo!
Right. And the headline risk, and not to mention the actual supply demand risk of what that does. If the
good idea liquidating that. Yeah. Woo.
Yeah.
Yeah. And again, what I want all my channel followers to know that, yes, we're dealing with lots of scary headlines, but it's always about opportunity shopping list. This is how bottoms go in. You find out, just like Bernie Madoff. We found out that Bernie Madoff ran the largest Ponzi scheme ever in a bear market. Lots of very well and smart people got caught. This is what happens.
And I've seen a very, very, very intelligent man lay out a study on exactly when to buy in the market to produce your higher likelihoods of call it 7 to 8% returns. And the best time to get invested in the market is when consumer confidence is in the can. And that's where it is right now. It's the lowest it's ever been. And your likelihood of getting the study is an 8% return is something like 50% higher over the next 10 years than it is when the consumer confidence is at its average point.
Yeah. And again, folks, the market is not the economy. The economy is not the market. The stock market typically leads the economy by 6 months. I believe we're in for a long, drawn-out recession, which we haven't even started yet. But more pain ahead. Do the work. Don't be emotional. Get your shopping list. Buy real companies. They make real things that have real profits. And over the long term, you will be okay. Taylor, where can people find you?
Yeah, find us at Instagram. Putting out daily content there, minute-long, 30-second long clips, just general economic studies.
Awesome. Thanks, buddy.